please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. Good afternoon. You're watching Halftime Report. I'm Samira Abdi and with me is my colleague Nigel D'Souza. Hi Nigel, good afternoon. Though it's not turning out to be a great afternoon at the moment, the market has certainly climbed off from its morning high. So we're just seeing minor gains now, about 0.25% higher on the frontline indices. So far, the mid-cap index is matching step with the frontliners. But despite the fact that Asian markets have literally bounced back to life today as trade fears have eased, our own market is certainly not keeping in step with its Asian peers. From the highs, we've certainly climbed off. So just about managing to hold on to mild gains. In fact, the Nifty Bank has dipped into the red.
That's right. You know, Samara, that was always going to be a challenge because you had global cues that were positive. We were going to start off in the green, but the second half of trade was going to be quite interesting. But just after a couple of hours of trade itself, we are seeing some selling pressure. The Nifty Bank, as Sumera said, is a relative underperformer, and a few levels you should be watching out for. On the upside, even if you get up and going, then the 10,446, that's the mark you should look at because that's where a 100 DMA comes on the upside. While on the downside, most of the street believes that we'll protect the 2018 low of around 10,276, at least in the near term. The 200 DMA, by the way, comes in at around 10,120. And in fact, that should be a firm support as well. For the time being, not too good news because we have come off from the high point of the day. But first up, let's run you through
all our top stories. It's time now for movers and shakers. So first up, let's begin with JSW Steel. In fact, it's a CNBC TV18 exclusive. The company has signed an MOU to acquire Italy's second largest steel maker, FRP. Kritika Saxena has all the lowdown. Kritika.
Hi, Samira. So this is an expected acquisition. People have been vying for it for a long time. In fact, about 4 years ago, they had bid for this and didn't work out because there were labor issues in Italy. But those have been sorted out, and we understand that an MOU has been between GSW and FRP. Essentially, FRP has a capacity of about 2.5 million tons. In terms of valuation, it isn't much for GSW. It's about 590 to 600 crore rupees. So as a domestic company is definitely not much, but yes, it does give them that capacity addition and the fact that they will be able to expand in the international market. We understand now that over the course of the next 1 week, there will be exclusive conversations. They will take the negotiations forward. And for procedure, they need government approvals within Italy before they can actually make an announcement. So the second those approvals come in, we will see a binding term sheet being signed. For now, the MOU has gone through.
Okay, all right, Kritika, thanks so much for that. Well, Naveen as well joins us with some news on Jain Irrigation. Naveen.
So in fact, Nigel, if you see, the stock is off its highs a bit, but still nevertheless a significant impact on the company given the fact that it has won an order in their micro irrigation segment for the state of Karnataka. The total order size is around 290 crores. Why is this important? Because the total order book of the company is around 4,100 crore, but the micro irrigation part, which is the higher margin business, above that 15% margins is what the company generates. Over there, the total order book is around 1,800. So nevertheless, a significant amount given the fact that it's around 10 to 15% of the total order book of the micro irrigation business. Also, going ahead, the company had told us that they will be laying trust on two important segments of the company. One is the micro irrigation and the other one being agro processing. So some bit of a headway seen on that front, and that is the reason why the stock is up in trade today.
All right, Naveen, thanks for that. Let's head to Delhi then. Ashmit, why are you tracking Reliance Infra? Ashmit, can you hear me? All right, we'll try and touch base with Ashmit in just a bit, but steel remains on our radar. It's been a good day for a lot of these steel companies. Nigel, another price hike coming?
Yeah, that's right. Samara, there's a price hike coming. That's what's helping steel stocks. But I think even overnight, the tweet that came in from Donald Trump, he indicated there could be some scope of renegotiation in terms of that NAFTA agreement. So I think that as well, that's going to be, the key point that we're going to be tracking. More than the global, though. In fact, today, we are saying that, in fact, Bank of America Merrill Lynch, they are saying that Indian companies have gone ahead, increased prices by around 1,000 rupees on a per ton basis for March 2018. So that's good news. They're saying now year to date, well, the prices are up by nearly around 11%. So that's good news as well. And they're saying that, in fact, in comparison to international prices, Indian prices are still at a bit of a discount of nearly around 5% to around 6% in comparison to landed imported steel. So good news coming in for the steel companies. But I think really tracking what Donald Trump says and how those import barriers do play out, that's going to be, top of mind rather than what goes on in the domestic market.
That's true, actually. All right, but let's focus on what's happening back home, and what we can expect is a harsh summer this year. Now, ice cream majors are expecting to clock a 20% volume growth in the period between April and June. Which categories will drive this growth? Priya Sheth has the lowdown. Priya.
Well, absolutely. With a harsh summer and mercury expected to rise, we can expect much more demand as far as the ice cream segment is concerned. In fact, what we do understand from our sources is that ice cream majors are eyeing a 20% kind of volume growth as far as the segment is concerned in the April to June period. But of course, growth is going to be led by premiumization, new launches, as well as better cold chain infrastructure in smaller cities. But, let's talk specifically about the kind of launches that are expected. Now, most of the launches that companies are planning would be in the traditional segment, dry fruits as well as dark chocolate and premium variants is what we do understand. But of course, Amul, we understand, is looking at launches of about 8 to 10 new products this summer. Vadilal, in fact, is looking at launching about 15 new products this summer. And premium launches in larger cities as well as impulse launches, that's the stick variant launches in smaller cities, is the strategy that many of these ice cream players are going to be following. In fact, we did reach out to many of these ice cream players. Do remember that 40% of their revenues is earned from the summer period. Amul said that they do expect a 15 to 20% increase in volumes in the ice cream category. HUL said that they have planned several innovations and they're expecting good response from new launches as well as premium products. Vadilal said that they expect good growth in demand for ice creams this summer, and they expect traction in the cone, carry home as well as the stick ice cream categories.
Okay, all right. Thanks so much for that, Priya. Well, Mangalam's with us as well. Mangalam, up for an ice cream?
Up for an ice cream, Nigel. Not a Vadilal ice cream or any other ice cream, but tell you what, Priya spoke about the 20% volume growth assumptions as far as the industry is concerned. But we need to also equate that with the kind of value that the street is paying for that. The big benchmark, of course, is the November 2017 deal that took place between South Korean company Lotte and Havmor. So that deal was worth about 1,020 crore rupees, and FY17 sales of Havmor that time were close to around 450 crores. So valuing that at around 2.5 times FY17 sales itself. How does that compare with what Vadilal traded at? Well, Vadilal's current enterprise value is close to around 740 crores. Their FY17 sales were closer to that 500 crore mark. And the first 9 months of this year, they've grown at just about 10%, closer to that 429 crore mark. So why the premium valuations for Havmor? One, because they have an FY20 revenue target of 1,000 crores. So does that mean for this valuation of Vadilal to go up, they have to do about 1,000 crores of growth in 1,000 crores of revenue in FY20. That implies 27-28% of CAGR, which compares with about 11%. So yes, 20% volume growth expected, but a bit of it is in the price.
All right, Mangalam, thanks very much for that. Well, in a booster shot for commercial vehicles, reports indicate that the Finance Ministry has approved the vehicle scrapping policy, which will allow companies to scrap commercial vehicles older than 15 years. We caught up with Gopal Mahadevan of Ashok Leyland, who welcomes the news of the government's fund infusion of 5 lakh rupees for the scrappage of older vehicles.
The government is mulling about giving about 5 lakhs of rupees for vehicles which are over 15-year-old. We'll have to wait and see for the announcement. But having said that, what I can tell you is that if this were to happen, some of the larger fleet operators who have older vehicles may want to actually switch over very quickly to the newer vehicles. So this is a very, very positive development, and I think in terms of the demand, it's a little difficult to forecast, but I would say that 2 to 3 years of, industry volume is what you would see in the initial year or couple of years as a replacement volume if things go well.
Well, Ashmit as well joins us to tell us what's going on with Reliance Infra. Ashmit.
Well, as far as Reliance Infra is concerned, big relief coming in for them. Reliance Infra, keep in mind, had received an arbitral award in their favor for 3,500 crore rupees. 2,900 to be specific. You add the interest cost to that, adds up to 3,500 crores. That is what they were due to receive as per an arbitral award from the Delhi Metro Corp. Now, what's interesting is that Delhi Metro Corp had challenged the execution of this award on various objections, on various grounds before the Delhi High Court. What we now learn is that this morning, Delhi High Court, in its judgment, has set aside those objections, has made it abundantly clear that the award will be executed in its current shape and form in favor of Reliance Infrastructure, and that Reliance Infrastructure is due to receive that amount. 2,900 crore rupees arbitral award plus the interest component adding up to 3,500 crore rupees. And towards that end, the Delhi High Court giving very, very clear instructions that DMRC will have to cough up that amount, will have to park it in an escrow account, and that's what's status quo as of right now. Of course, important to remind our viewers that this is an order passed by the Delhi High Court. The DMRC does have the option to, does have the legal remedy available of challenging this order in the higher court. Back to you.
All right, Ashmit, thanks for that. Also, earlier this morning, we caught up with Sachin Jain, the VC and MD of Vardhaman Special Steels, on the road ahead for the pricing of graphite electrodes.
From May of last year till now, the prices have gone up roughly 6 times. Current prices are about 950 or 1,000 rupees a kilo from April is what we are expecting. As of now, the prices seem to have plateaued.
All right, that was interesting commentary, Sumera, coming in from Mr. Sachin Jain. Why? Because, in fact, he's speaking about graphite electrode prices. And both these two stocks, HEG as well as graphite, both of them, they're virtually at the high point of the day. Even if you take a look at graphite, that as well is holding with a gain of around 4%. Why is that? Because as per the commentary of Vardhaman Steels, what they're saying is that, in fact, yes, the prices have gone up by nearly around 6 times. That we are aware of. But on a per ton, if you calculate the 950 to around 1,000 rupees on a per kg basis, that works out on a per ton in dollar terms, it works out to nearly around $14,000 to around $14,500 per ton. Now, that's sharply higher than what the street is working with. The street is working with a number of around $10,000 per ton to around $11,000 per ton. And that explains why both these two stocks are doing quite well. But on that note, let's wrap this up. Let's do a quick recap of all the stocks that are buzzing at this point of time. Jain Irrigation, we have JSW Steel, Tata Steel, JSPL, SAIL, Reliance Infra, Ashok Leyland, Vadilal, Vardhaman Special Steels, Graphite India, as well as HEG. Sugar stocks, they are under pressure in today's trading session after ISMA says that they have revised the production target for the current year to around 25 million tons from around 25 million tons. Abneesh Verma, the Director General of ISMA, says that they may have to revise the sugar production expectation further in tomorrow's board meet. Let's listen in to what he had to tell us.
See, the full year estimates, we will be actually visiting the whole thing tomorrow in our board meeting. So I don't have an official number there. Yes, we did revise our estimate on the 17th of January to 261 lakh tons. But from that date onwards, we are seeing that the yields in Maharashtra and North Karnataka are giving us real surprises. And the yields per hectare there are probably coming out to the best or the highest ever probably in the history. And that is why we will have to revise our production estimates tomorrow in our board meeting.
All right, so sugar production already on the higher side and expected to head still higher from here. What could be the impact? M. Manikam, the Executive Vice Chairman of Shakti Sugars, now joins us on the telephone line. Mr. Manikam, good afternoon, sir. Thanks very much for joining in. To begin with, could you tell us that if countrywide there is an increase in production and to this extent, what might be the impact on prices?
I think we are looking at a production increase as, ISMA is talking about it. We will have a higher production this year and we will actually create a glut. I don't think India can export because we have higher costs and we will not be in a position to export the sugar. So it will be a glut and we probably will see lower prices going forward.
All right, Mr. Manikam, if you could give us some numbers. You're saying that you're as well expecting to increase production in this year. Did we hear that right?
Yeah, I mean, I think it's about 26 million. I think maybe they're talking about 27, 28.
27.
I don't know what the numbers are exactly.
Yeah, so earlier it was 25. What ISMA has told us that it's 26, but there is scope for them to revise it even further. So we want first, let's talk about the sugar prices. Will they come under some pressure? I mean, do you expect them to trend even lower from here?
See, the government has taken some steps, so may not be major pressure, but there will be a long-term pressure on sugar prices.
What is the current price?
Current price is about 30, 31.
Okay.
And our cost of production is 34. So most of us are underwater at this point of time.
Oops.
And you are looking at, consumption of 24, 25. So we will have surplus going forward again. So this will create a problem for the industry going forward. And the main problem is that the cane prices are higher than what they should be. Maybe we should be looking at reduction in cane prices to reduce the production.
Okay. Sir, what is your current inventory and at what price?
Inventory is not much because our south we have had a very low crush this year due to drought. So most of
inventory is low. Okay. Mr. Manikam, you gave us those numbers. The current price of sugar is around 31 rupees. Your cost of production is 34 rupees approximately. But if you could tell us, what is the production number? Last year, what was the production number? And this year, what could it be? Mr. Manikam? Oh, okay, all right. I think we've got him on a bit of a scratchy line. We'll try to reconnect with our guest there. But we're seeing a bit of a recovery in the Nifty as we speak. A couple of these OMCs are doing well, and that's what's helped the Nifty to get back above that 10,400 odd mark. ICICI Bank, remember that stock was under pressure. I briefly saw it even move below the 300 odd mark. That's moved up close to around 1%, so that's good news. And Yes Bank, that's the other private limited bank. In fact, that's doing quite well. That, in fact, is up close to around 2% or thereabouts. Keep an eye out on Dish TV. I think our ticker team was alerting us as well. Suddenly, that stock has slipped. I think it's down close to 7-8%. I don't know what's going on there. It's down close to 10% now. Whoopsie. Just keep an eye out. I'm sure our team is trying to, get in the information what exactly could have gone on there. But suddenly, Dish TV is taking a hard knock. It's moved to the low point of the day. It's down close to 9%. If I'm not mistaken, I think it's drifting towards maybe a 52-week low. So keep an eye out on that stock as well. It's moving lower as we speak.
Even the banking stocks, Nigel, when we started, the bank Nifty was actually in the red at that point of time. Since then, it's seen about 0.25% in terms of an up move. And a lot of these stocks, if you pull up the intraday, you'll see ICICI Bank, Bank of Baroda, Canara Bank, PNB. A lot of these stocks have actually moved higher.